Okay, quick Thursday morning radar update. So we're kind of grinding sideways a little bit this week, aren't we? We're digesting is the best word for it. Sideways digestion. Last week, Europe was leading, bottom left to top right, and the US was digesting. This week, the US is bottom left to top right, apart from the small caps, which are, well, they are. There's you know, this week's action starts on the 18th. So the US is doing all the lifting this week. In the portfolio, WATR, fantastic. We've got the open interest pop. Just let these news chasers, treat their investments like slippery bars of soap, and and let it get into the zombie hours, and let's see how we go over the next few days, because that's what really counts on this. News days are usually noise days. Direction looks as though it's right, but in the meantime, as we know, all these people who chase news reports every day, you're probably chasing the worst potential sort of entries there are out there for reward to risk. Moving on. And I will go into today's volume leaders. The sun's just come out and I can't see the screens, but I can sort that. So it is 17 minutes past 10. We should have traded 26% to be on average volume. It's a quiet day in the large caps. Screens were quite quiet yesterday as well. Investment trusts. And into the small caps, 26%. A little bit more running on the small caps. GUS. This is a lose very slightly less scenario, and it's a tick up in turnover. So obviously, if you look at the numbers, you should see, well, if you look at the numbers right, you should see what they talk about in the reports, not the other way around. That's what we see. We see acceleration in the turnover. That should be the story. BPM, no forward. Industrial metals here. Obviously, we've been talking about these blue sky ones hitting the screens for a while. There's WATR. So when it comes to my methodology again, I will just throw it out there. I've only bought at high prices on WATR. All the way up, I've bought high prices. And that's why it's a big winning trade for us, because I bought highs. I haven't tried to scrimp and save and get a cheap price. I bought high because that's where direction is found, So one of the biggest winners in my portfolio, and I've got the worst price available when it comes to the value sort of investor mentality. For me, it's the best price available. The best price available is the price where nobody's at a loss recently. No recent buyers are at a loss. It's got to be the highest price. You get paid where you sell minus where you buy. That's what you get paid. You get paid the difference. You don't get paid any more for buying something at a lower price. And basically, it's how far it goes. It's not what price how far it travels is how much, it doesn't matter what price you pay, is what I'm trying to get across here. You can buy it at a low price and it'll go lower. You can buy it at a high price, it'll go lower. You can buy it at a high price, it will go higher. That's my game. Buy it at a high price. All the best ones will trade high prices. The worst ones won't. I think there's a mental block with thinking the price you pay is actually connected to the profit you make. That it's how far it travels. That is the how much gas is in the tank. How far it travels is actually the thing what makes the money, not the price you pay. And then the argument is, well, something what's cheap can travel further. Not really. I'd say the exact opposite. Something that's cheap is probably because it's, you're paying for a short journey. So say I'm working on that trail point. We talked about it yesterday. If you're riding that one, happy days. It's a lose less scenario. Its turnover is ticking up, decelerating, but it's still a huge tick up. I think 6.4 to 9.4. It lost 2.7, and it's trading towards a loss of minus 1.1 according to ShareScope. Direction and that's had a bid, hasn't it? So I will leave it there. The sun is out. I'm going to walk away from the screens. Cheers all.